Hello everyone, welcome back to the channel. If you're new, welcome, and if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. So I came across this article and I wanted to share it with you guys because we have been talking a lot lately about finding discounts, right? Finding deals while the market is crashing, right? And so I found this great article and I thought it would be great to share with you guys. This is a free website. It's called theinvestorplace.com. You guys know I'm always talking about financial literacy. That means making the time to educate yourself. And I like to share, a lot of the resources that I use to educate myself, not just to research stocks, but to really, find new stocks or new funds that, are at a discount on what's going on in the economy, just to, get a feel of, just like how the global world is moving. And so this is a really, really great website that I do like. You see like an ad over here. I tried to block out as much as I could, but we're just going to keep it moving. Like I said, it's a free website, but they do have ads, but it's a lot of good information on there. And that's what the focus is. So 5 safe stocks under $40. So not even $50. So I'm going to probably title this video 5 stocks under 50 in case this go up a little bit, but even at $40, good companies, blue chip companies that are at a discount, even the good stocks and the good funds are getting hammered right now. So we're going to just go through this list and I'm going to pull up Robinhood so we can just do like some quick research together. And again, it's just finding good companies that not only pay a dividend, but that are really just a good buy. Again, not financial advice, but we're just talking, right? And I think sometimes that's missing, just being able to get together and just have a conversation, not just around money, but around investing, around how to build your portfolio, how to research stocks, how to make sure you're pleased long term with what you have your money invested in. And so this is the type of stuff I like to do here on my channel. So the first one you can see right here is good old Pfizer, ticker symbol PFE. Now, Pfizer is a really, really good company. My husband has worked with them many, many times. And it's a solid company. Many of us have heard of them or come across their products in some way, shape, or form. I mean, we may not realize it. Pfizer is not, it's not as sexy as Johnson & Johnson, but Pfizer is a really great company. It's just suffering right now. You can see right here, it said it fell 30%. 30%, as we move away from, the C word, I can't say it, I don't want to get demonetized, but the C word right here, as we move away from it, things start to regress a little bit. But you can see that even the writer talks about this is a great opportunity. Pfizer is a multi-billion-dollar company. They are in the pharmaceutical or healthcare industry, which is a sector to me that does not get enough love. It doesn't get enough love. Like technology, communications, maybe like consumer staples, that gets a lot of the love, energy, maybe even like some financials, but like healthcare doesn't get a lot of love, but it's a sector that we all rely on, that we all need, all those companies. And so, Pfizer is a good one. Let me bring up Robinhood and type in Pfizer right there. I'm going to just do the ticker symbol. But again, with Robinhood, you can actually spell it out. If you do want to open up a Robinhood account, you can use my referral link down below. You get some free stock. I'll get some free stock. And it's a great way to support the channel. And look at this. You can see, look, even despite the money we put in, like this is real. The market is tanking. The market is tanking. Even after we put all that money, it's still falling. But long term, we'll be fine. But look at this. Pfizer is down. And that article was written before the market crashed again this past week. So, and I'm filming this video on October 29th. So, the last weeks of October, the market has just been terrible. So it fell down even more. So think about this. A lot of the products that Pfizer makes cost more than the share of the company. So again, if you're looking for something that's at a discount, you may want to look into this. You can see it's down year to date 40%. It's getting hammered, and you can see some information about it. They're headquartered in New York. Look at all the employees they have. Wow, that's crazy. It's a lot of people. But you can see like what they are. They are a research-based global biopharma company. They engage in discovery, development, manufacture, marketing, sales, and distribution of a whole lot of pharma products. And so again, you probably have come across them. You just don't realize it. Dividend yield looking really, really good right now. The market cap or the value of the company is really, really good, almost $170 billion. But right now it's getting clobbered. It's getting clobbered. They have some articles right here, and so again, just wanted to just pull it up a little bit so you can see it. We do not own any shares of Pfizer. It is not by choice. We cannot own it because of our line of work, or my husband's line of work. But I think it's a pretty decent company. Again, not financial advice, but you may want to look into it and do your research. If it interests you. Coming down to what's the next one? All these articles. Okay, Intel. Now, I have heard of Intel. Now, the reason why we don't invest in Intel is because we think its competitors are a bit better. That's just personal opinion. You can see that, Taiwan Semiconductor Manufacturing is their biggest competitor. But, again, I just prefer, we have NVIDIA. That's in long-term retirement accounts, and we started putting it in Interactive Brokers. I just like NVIDIA right now. The CPU industry is a hot one, but in terms of like, if you want to get some at a discount, like Intel, let me go here and type in Intel. Okay, let's bring up Intel. Their price is decent. I mean, look at the price. Let me pull up the price. $35. And look, year to date, they're up 31%. So, just because I may not own it doesn't mean it may not be a good company. I just can't own everything. But if you're looking for something at a discount right now, it's under $50. I mean, it's much cheaper than NVIDIA and AMD, and Taiwan. So again, good deal. It's just they have a lot of competitors. But if you're looking for something at a bargain, and I believe this does pay a dividend. Let me see. Yeah, 2.76 dividend yield. The sweet spot is always between 2 and 6%, in my opinion. But right now, look at the PE. They're in the negative. So, they're having a tough time right now, on the revenue side. And again, competitors. They got a lot of competitors. They got a lot of strong competitors too. So, but it's under $50. You all probably have heard of Intel. So, it's a great company to look at, but in terms of CPU and server chips, they are a big player in that. But again, you just want to, do your own research. So again, one of my favorite websites is simplysafedividends.com. That go into detail. You can also go to Seeking Alpha as well. Yahoo Finance. Again, INTC is another really good website. This website, Investor Palace, is another one. I said INTC, that's the ticker. I mean Robinhood. If you're a beginner, right? If you don't want to be confused by it, it just gives you what you need to know. But yeah, a lot of people are liking Intel, especially when it comes to like AI and all of that. The third company is SoFi. Now, I have several of you have told me about this. I do not own SoFi. I am looking at it, but it's not on my watch list yet. I'm just like looking at it. But SoFi, I think, let me pull up SoFi. I think they're like are they under $10? Let me see. SoFi. How much are they? Okay, so look, wow, look at this, up year to date, almost 50%. Look at this, almost 50% year to date. Let me come out to the past 5 years. Okay, so they IPO'd, meaning that's when they first, appeared on the stock market at $25.14. So they really have been falling. So one reason why I like to zoom out or like go to the past 5 years is because it gives me a better depiction of what's going on. But maybe it's starting to bottom out. You can see down here, this is just some technical analysis when, it's starting to bottom out and it's starting to rise again. Let me come to the past year. Like it's starting to, it's bottomed out and it's starting to rise again. Again, I'm looking at it, but I'm not buying it right now. But at $6.94, which is basically $7. It may be on some of your radar. They do not pay a dividend, and their PE ratio is in the negative. So again, I think there's some struggle on the revenue side, and but I think long term they may be a contender. You can see their market cap right here. But right now I'm not investing in it. But like I said, these are safe stocks that the article is saying safe stocks for under $40-$50, and you just saw it was at $7. So let me know. I know some of you have bought this. Let me know how you're liking it so far, and what drew you to it, if that makes sense. Okay, let's come down to number 4. Okay, we're going to come to Freeport. So let me bring up the position. FCX is the ticker symbol. FCX. Pull that up. See how it's performing year to date. I like to just look at year to date. So it's down about 11%. Again, remember, a lot of the companies, a lot of the good companies and funds are down. Okay, it's not just like one or two. Most of them are down. The market in general has been getting clobbered. Okay, but let's scroll down a little bit. It's down a little bit year to date. But you can see that they engage in mining. Okay, so they mine copper, gold, and I'm not even going to attempt to say this word. But yeah, they're into mining. So again, that's a very like under the radar type of sector or industry. They do pay a yield. It's small, but I mean, a dividend is a dividend, right? And I'm looking at this as like you know, if you want to get some diversification in other areas where you may not be exposed to. Like materials, I think this is the material sector, right? Yeah, material sector. So this may be a good deal, and right now it's under what, it's $33.75. So under 40, under 50, and I actually may put this on my list. I'm looking into, I like the PE. See, it's about 22.62. Small dividend, but you know, in terms of growth and just something that a more diversification. And especially if I want to get something in the materials, I've been looking for more materials just to base our portfolio in. Not a whole lot, but again, diversification. I may put this on my watch list. Now, don't you guys go out and get it because I said I'm putting on my watch list. I want you to do your research and then come back and let me know, you know, what, you know, you are doing. But copper prices, like this article is saying, is falling. So, you know, it fell a little bit, but, you know, long term, that's what we're looking at. And you can tell that they're trying to get a little bit into the AI, but this article talks about how Freeport has been using machine learning models at its copper mine in Arizona. So the machines that they're using, wow, like maybe using AI. So you know, that's something that, like I said, this piqued my interest. It's on my watch list. Not buying it yet, but if I do, my YouTube members will probably be the first to know because you know, they are my YouTube members. And then the last safe stock under $50 or under $40 that this article refers to is US Bank Corp. So let me type this in. Come over here. USB. Is that the ticker? I forgot what it was that quick. USB. I was right. See, I was right. US Bank. Okay, let's see how this is doing year to date. So it's down, it's getting slammed about 30% year to date. Let's come out to 5 years. So see how it's been doing past 5 years. Okay, so it's still down. Even if in the past 5 years, it's down 40%. So to me, that's a red flag. You know, the past 5 years, zooming out. So we're not even talking about just this year. We're talking about before the pandemic. So if it's still struggling, then you know that's a red flag to me. I will want to do like some good research into this company in terms of, and when I say research, I mean in the fundamentals, like looking in the financials part to see like if this is something I want to put our money into. But you can see they engage and they're in the financial sector. I think we have enough financials in our portfolio right now, so I'm probably not going to put this on my watch list. But again, if you own this, let me know why you own it and how long you have owned it for. But they do pay a dividend. They have, you know, a decent price to earnings ratio. Market cap is about 47 billion. The dividend is about 6.22. Let's see what the article says. It has been a constant performer among U.S. banks. Okay, delivering superior profitability and efficient ratios. My only concern is it has some issues. But it's a regional bank as well, so regional banks are probably going to get hammered the most because of Silicon Valley Bank and some of the other regional banks. I think if I get into banks, I would probably want like a bigger bank like Bank of America or JP Morgan versus a regional bank, because right now they're like, I think a lot of people are thinking, can they survive, you know, this? So just, you know, some things that are just kind of running through my mind. I don't have scripts for my videos. I'm just talking. We're having a conversation. But let me know, like, if you guys even have other banks in your portfolio. Like, do you have JP Morgan? I know that was one of the picks for our investing challenge in the past couple months. But do you guys own Bank of America, Wells Fargo? What's another one? PNC? Do you own what's this, US Bank Corp, let me know down below. I love talking with you guys. But again, thank you guys so much for watching. I hope that you guys like this video. Again, under 50 bucks. Under 50 bucks. There's a lot of good deals out there right now. And if you're looking for investments as a beginner, or if you're advanced, you can just stick to funds, right? If you want to find a discount there. But if you want to get into individual stocks, do your research, right? There's more risk involved. Though the reward can be greater, you want to understand what you're investing in. So again, thank you guys so much for watching. Please make sure you like, share, and subscribe. Hit the bell notification button so that you don't miss an upload every time I post a video. And until next time, y'all already know, I'll see y'all in the next one. Bye-bye for now.